Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500, and as you know, we've been looking at a possible triangle that's been unfolding, which is a 5-wave structure, and each structure has got a 3-wave pattern in it. So we've been looking at this E wave at the moment, and we can see that we've got a larger 3-wave pattern here, and the price has moved up from here. So there's a very good chance that the triangle is complete now, and if that's the case, then we'd be looking for 5 waves to the upside through here, maybe a bit higher than that, and then we'll see a larger correction unfold from that point there. So if we just drill into that a little bit closer through here, yes, so it does appear that, we'll have a look at this on the Dow Jones more so, that we've got that nice 3-wave correction here. So I'm thinking that this is part of it here. The other sort of little scenario that we just got to be mindful of is that the D wave could be here, and we'd be looking at an A and a B and a C here before it finishes here. So what we need to do is we need to work out what's in this little move here. Is it in 3 waves or 5 waves, and so forth. So we know we could say that once the market moved above the 1510 here, then that would pretty much seal that situation there. Otherwise, we need to look for a little 5-wave structure up and 3 waves back, and that could be unfolding now. We'll have a look at that on the Dow Jones, and the Dow's the same as well. It's still, working the lower side of 14,000 there, so it's not support yet, and even once we get support, you can see that we've got this particular pattern that's going to sort of unfold here. So it's going to be tricky trading through all of this. There's no, strong trends that are about to unfold. So as you know, there's a beginning, there's a middle, and there's an ending structure to each degree of structure. So, but just drilling in there a little bit further, you can see the same triangle sort of pattern there. And this is the little move up here on a 5-minute chart through here. So I can see that we've got wave 1, 2, 3, 4, 5 to here. So we could label that wave 1 there and wave 2 here, and we could label this pretty close to wave 3 here, and a wave 4 to come back here. We'll need to see a wave 5 up through here. So if we've got that nice clean 5-wave structure there, which would be an impulse wave, then we would, as it meets supply up through here, the sellers then would see profit taking, and would see an A and a B and a C wave come back down, which would be in 3 waves. So 3 waves plus 5 waves is 8 waves, and that's called a motive wave, and that would give us confirmation that this is in here. But the personality of this is suggesting that it is in. But at the same time, I've just got to be careful, because this, as I count that as 1, 2, 3, and we're looking at 4 and 5 here, in reality that's 1, 2, and 3 there to that point there. So that can be the A, the B, and the C here. From that, if this moves, this little structure here is in 3 waves. Well, it's only in 3 waves until if this price pushes up here further, then up through the low of that wave 1 there, then it makes it 3 waves, doesn't it? But otherwise, it could just go down for 1, back for 2, down part of the 3rd wave, down the 4th and the 5th here. So it could fold down. So we would need for that to be a 3-wave structure. Then we'll need to see the price back up on the 13,930 there. So lots of little details there to mull over, but it is all sort of taking shape, and I know that it was double tricky really this week in terms of trading, because not only were we dealing with a triangle pattern, they were all very large swings, and then we've had like the Wednesday and the Thursday, which normally collect stops and so forth. So and they were sort of accentuated this Wednesday and Thursday with 1% moves in either direction. So a little bit sort of tricky there with getting through this triangle pattern. So hopefully that's will be completing soon, and we'll have more sort of control over the situation. The Australian market here, we were tracking this one down through here. You can see that we've got a little 5-wave structure through here. That's fine. We worked out that this was 3 waves through here. And now you can see 5 waves to the upside. So you can see this 1, 2, this will be the third wave, the fourth wave, and the fifth wave in through here. So at minimum, we should be getting an A wave, a B wave, and a C wave back into this area through here, which sort of also lines up with the BHP and so forth, the material sector not have finished their their larger ABC patterns, which we'll look at now when we look at the base metals. So, okay, just looking at BHP in the US, and pretty much the same for whatever other country you're looking at BHP in. It's traded in different countries. So we were looking at this as being a corrective pattern here. Once it had arrived, we could see that we had a little 5-wave structure up through here. So after that becomes an A and a B and a C at minimum, normally pulling back to the fourth wave, one lesser degree. But in an ABC correction, it's normally, the A wave, the B wave in 3 waves, and then the C wave in 5 waves down. So it still can come down to this sort of area through here before we see any sort of upside here. So the US dollar is pushing to the upside. So do I have it on this template? No, I don't on this template. But the US dollar is pushing higher, which is going to be placing pressure on commodities, and of course reflecting back into the material sector, which then in turn reflects back into the ASX 200. But so we're close to finishing this correction in terms of like the A, the B, and the C here, but it's not completed yet. So we don't have those long positions to go on in the material sector just yet as such. So anyway, that's that picture, and you just need to work. That will be the same reflected in the obviously in the iron ore companies. Other ones will take slight sort of variations on that as well. Anyway, let's have a look at copper. Now, the copper market, we were looking at a wave 4 here, and we were looking for it to come back 38.2% or to the 33.72 number here. That's pretty much sort of occurred now. It does look a little bit sort of bearish in the sense that that this obviously looks like a third wave in through here. So this would be a fourth wave and a fifth wave. So this would be the 1 and the 2 and the 3 and the 4 and the 5. So it could be counted as an A and a B and a C wave in here, but you just got to be a little bit sort of careful about that now. So we'll just monitor the bounce as we see it through here, because the reason I'm pulling this out for is because after 5 waves down, if that's the case, we'll get 3 waves back up. May not go as high, it may go to this supply level or the center of this one through here, and then we could see a larger pattern sort of unfolding through here as a wave 4, because that's what wave 4s do. If wave 2 is simple as an ABC here, simple and sharp, then the wave 4 tends to be sideways and complex and triangles and those sort of things. So I was kind of hoping that we would just get this here, but we may get this and this before we see a move up through here. And the other thing too is that if the move comes down below the top of wave 1 here, then that's going to create overlapping wave structures in the impulse wave to the upside through here. And there's only 3 rules in Elliott, and one of them is that wave 4 here doesn't move back into the price territory of wave 1. We are dealing with derivatives here, leveraged products, so we can allow a little bit of swing into that area. So we would look at that in terms of the 370, the trend line, those sort of things, and the 372 becoming the retested resistance. If that was all going to stack up there, then we would look at this being some other larger pattern to the downside. But as it stands, it's all pretty sweet at the moment. So but it's done what we expect it to do, to take this sort of high out through here. But would like to see support come in for this wave 4 now and start to see some movement up through there. Just looking if we've got that on a smaller chart through here. Okay, this is what I was looking for here, just a 20-minute chart here. I can see here that we've still got the fourth wave through here. So we've got, well, possibly not. I need to have a little look closer. One, two. It's not that's a healthy thing. This is not a healthy thing. So we may see this as a little fourth wave here, and one more little spike down to 371 before we see it come back up on there. So getting close, but we're still looking at the US dollar moving to the upside as well here. So this is the US dollar here. It's just moved up above the 80, but we'll have a look at that in the Forex section. The US dollar here is moved back above the 80, so it does that straight away, puts it into positive territory, and we're looking for it to find resistance from this trend line up through here. We're also looking at this as you know, in terms of a three-wave price action up through here. The larger pattern for all this we know is corrective. So when we have a look at the bigger picture here, this is also the daily as well, we know that this move up through here is in three waves, okay? So that means that we know that this pattern here is corrective. We just need to allow it to play out. So what we're sort of looking at the moment is that there's a couple of ways to view all of this, I guess, in terms of an A and a B and a C for an A wave, and an A and a B and a C for a B wave, and then a C wave up through to here, and then failing as well, which would take us through the trend line resistance through here. Now, that's where the market is at the moment, quite above the 80 through here. So this structure that's moving up through here, at the moment we're counting it as an A and a B and a C, but I guess what I'm trying to point out is that we can get a fourth and a fifth, so we can get that five-wave structure there in terms of a larger A, B and C there. It's probably not the case because of the triangle pattern that's occurring in the US indices, and also the bonds market as well. But I just thought I'd better draw that out there so we got a bit of an understanding if it does push higher through there, that's what we'd be looking at as such. Yeah, I'll just drill into this pattern a little bit further here. So there's different ways to count this particular structure. The count that we have on at the moment is this one here. So it's the A, the B, and the C wave coming up into the sort of 80-50 area here where that resistance is up there. There's also the count that I pointed out yesterday where we've actually got five waves up here to the A wave rather than three in terms of 1, 2, 3, 4 and 5. That's still a possibility as well, but it's also a possibility to be a wave 1 as well, as I just pointed out in the bigger picture here. So if I just come back to that in a moment, this move up through here, calling an A wave, it could be the 1 and back for the 2 and the 3 and the 4 and the 5. So that's this wave 1 here, wave 2, and this has got the personality of a third wave. So we just need to see how this sort of plays out through here. So look, one of the main things in terms of trading really is that the market is above the 80. It puts it into positive territory. It's got a positive bias to it. So because there's a difference between trading and analysis, so we need to trade what we see as such. So look, this is above the 80, so it's positive. When we have a look at the bonds market, as such, if I've got that here, yeah. So this is just the 2-hour chart, and we were looking at this yesterday because this would be doing the opposite of what the stocks would be doing, but also be in line with the bonds, as in line with the US dollar as well. So we were looking for an A and a B and a C wave up through here. So we're starting to see weakness, which we would at the 144. Let's just keep an eye on this, and if this continues to move down, but it's quite normal for it to come up and have a reaction sold off, find support, and then move up through here. So it can move up further as well. But let's just see how this plays out through here. And if this continues to find resistance here and starts to move down, then the US dollar will be a part of that as well. So we do expect it to move down. It's just a matter of getting confirmation that the ABC is finished here, and that will help us with the US dollar and also the upside for the indices as well. So this will all reflect back into stock as well. So. And of course, with a strong move up in the US dollar, we're seeing a strong move down in the euro as well. We're expecting the move to come down in terms of, as you know, we were looking at an A and a B, and we thought the B may have just gotten a bit bigger, or we weren't sure if that was just the A, B, C to there and it was complete, or this would be the A, the B, and the C wave to here and then down. But it has moved down quite quickly. Based on Draghi's comments on the eurozone. However, in looking at this here, the ABC correction is playing out quite nicely. The thing here, though, is that if that is the B wave here, which is likely, it's in 3 waves. It moves back up 50 or 60 odd % of the move coming down through here, not 60, but probably closer to 50. So a C wave has got 5 waves in it. So we would be looking at this as down for 1, ABC for 2 here, down for 3, which may not be finished just yet, through here somewhere, then the 4th, and then the 5th, which would take us a bit closer to the 133 area here. So there's a bit more downside here. And if we're going to see the US dollar, the US indices push up, then there's going to be some relationship with the euro here as well. So it should be interesting to see how this sort of plays out through here. The one in terms of trading, the 134 is the balance line through here. So that's the balance line through there as such. Yeah, it does seem it's the correction through here hasn't failed yet, and there's a nice accumulation process through here. It's up against some stiff selling there, so this will be a lot of short covering as well. The 134 will be the balance line through here. Group 1 will be the resistance, and Group 2 here will be the support here. I suggest just to allow this to play out through here a little bit further, allow it to move, do its thing. Once you can see if it finds support on top of 134.30 and the US indices have finished their wave 4 triangle, then that could just push up from there, and that would be a catalyst step there, the 134.30 as support. But it's quite normal for when a market's working with a large number that Group 1 and Group 2 will be the trading range for that. And the trick is not to assume anything too quickly, just allow it to play out. It's not going to go very far anyway. Allow it to play out. And, once it's matured, you should be able to see what side it should fall on. But we're still expecting further downside. So just allow this rally to run out of steam, and there should be another push to the downside. But like I said, there'll be a correlation on the 30-minute, 1-hour chart with the S&P 500. So that wave count's got to come into it as well. So, yeah, it's got to allow that to play out. The Australian dollar is doing pretty much what we expected it to do. We were looking yesterday, and in fact yesterday we were talking about this little wave 4 here, weren't we? We were looking at somewhere in here as this being a little ABC here, or an A and a B here. I think that was it, somewhere here. And I mentioned that the wave 4 can get quite complicated and quite messy. That's what it does. And that's what it's done, really. It's just played out in a much more sort of complicated, this is a 15-minute chart here, into a more complicated situation through here. So the B wave, which is always in 3 waves, so we've got the A and then a little A, B, C here for another B wave, and the C wave here, and then we've got the C wave here, which is always in 5 waves, the 1, 2, 3, 4 and 5 to here, or an A and a B and a C to here, and then the wave 4 to C to here. So a complicated wave 4. That's why I've got that just there. It's also the the previous high as well, which would leave us in terms of this wave 5 to the downside, which would have 5 smaller waves in it. So if that is the high there, then we'll be looking down here for wave 1 and 2 here. Strong third wave coming down, and this will be another fourth wave here, which could also get complicated like this guy here. So you just need to be a bit mindful of that. It's on the 102.72, as mentioned yesterday. That was our target, the 272. Just a strong number. It's just stronger than the 72 by itself. But look, once this is completed here, there is of course the rest of the group 2 here, which would be the 80 and the 65 here. So that little group there, once the 102.72 becomes a retested resistance, then we'll get that other little spike down through here. But once that's done there, it may come to the midpoint, I'm not quite sure, but once that's done and dusted here, we should see a move back up through here. So so just be prepared for reversal through here. So after wave 4, wave 5, and then an A and a B and a C back up through there. So, but this, just give it time at this 102.72 here, and the cash market, the ASX 200, also needs to sort of check back into the 4,900 and find support there. Of course, the US dollar's got to turn, the bonds should turn with that or drag that down. The US triangle needs to be completed. We need to see some structure to the upside. So all those markets should turn together. We just need to gather enough evidence to confirm that move, which should come to us tonight in the US market. So. Alrighty, well that's it. So everything's pretty much on track. So good morning and good luck, and enjoy the day ahead, and of course the weekend.